So in today's video, we're going to show you how you can do a Roth conversion in an IRA when you're under the age of 59 and a half and use the TSP to actually pay the taxes for you. Because if you do a conversion and you pay the taxes out of the conversion in your IRA and you're under 59 and a half, you're going to pay a penalty. So we're going to go through how we figure out the number to Roth convert and then actually go to the TSP website and show you step by step how you get the taxes paid. So if you want to Roth convert and you're under 59 and a half, stick around. We'll show you how to do it. Hey, my name is Mel Stubbs. I'm a financial planner with Christy Capital Management, where we're helping federal employees plan for a better retirement. If you need personalized help, go to christycapital.com and click Talk to an Advisor. Today, we're talking about how you do a Roth conversion using the TSP to pay the taxes for you, because the way the TSP is set up, the TSP won't let you do a Roth conversion inside of the TSP. In an IRA, you can do the conversion. So you can retire under the age of 59 and a half and move your TSP out into an IRA. At least move some of it out to an IRA and do a Roth conversion. But you don't want to pay the taxes from the conversion because that would be deemed a penalty. The portion that you pay taxes would be penalized. So we're going to go over an example to see how you use the TSP website step by step how to do it. So as a case study, we're looking at someone's income and they're showing last year their income was $49,394. And for whatever the reason was, there's going to be some adjustments to that number. I don't remember if they were self-employed or exactly what the adjustments were, but we figured out that they thought they would have a $23,900 of increased income for this year. This year is going to be a better year. So that means we think their income will be around $73,294. Now, this is where the disclaimer comes in that we are not CPAs, we are not accountants. You may want to work with your tax professional if you have one, but we're basically trying to figure out how much income will they have this current year. So work with a tax professional to get more exact numbers for your situation. In this example, it's showing that if she wants to max out the current tax bracket of 22%, there would be $27,231 left in that bracket. If we convert up to the top of the 24% bracket, you could do $118,656 conversion. Keep in mind, there could be standard deductions or itemized deductions or some other things. So we're using ballpark numbers here. In the ballpark of $27,000, you could Roth convert and max out the 22% bracket. And in the ballpark of $118,000, you could max out the 24% bracket. In this example, they chose to max out the 24% bracket. So just to leave some leeway and some wiggle room, we didn't max out 118. We chose to do $105,000 to leave a little bit of room. Now, there's several reasons why you may want to leave some room. Maybe you just haven't figured out the income correctly and you want to leave some wiggle room. Maybe you need to take a distribution later in the year, and so you want to leave some room where that distribution can be made and keep you in that tax bracket. Maybe you don't exactly know what your income is and you just want to leave a little fudge factor just in case. If you do too much, maxing out the 24% bracket, then you're going to go up to the 32% bracket, and that's somewhat penalizing, so you don't want to do that. So looking at the math over here, if we do a $105,000 gross conversion and you pay 24% federal tax, that's $25,200. And then 5% state tax, that's $5,250. So that'll be a net conversion of $74,550. If you're over the age of 59 and a half, you could do a $105,000 conversion, withhold taxes, and $74,550 would show up in your Roth account. But we can't do that in this case because the person is under 59 and a half. So doing the math here, we want to do a conversion of $74,550. So in the IRA, you would do a Roth conversion, $74,550, and not withhold any taxes. And $74,550 shows up in the Roth account. Then we're going to log into TSP, and we're going to have $25,200 distribution from the TSP set where the TSP, they're going to take 100% of that and send it to the IRS. So let's log into TSP and show you how that's done. In this case, the person is retired. They moved out the majority of their TSP and they left some in there so that they could take distributions if they need to prior to 59 and a half. And we can pay taxes for Roth conversions. So you can see about $97,000 is in the TSP. You want to go find withdrawals and rollovers, click on that. You want to scroll down and do the partial distribution. You have to certify that your spouse's information is correct and continue. You may have noticed on here that we're doing the single tax bracket for tax planning, yet the person is married. And in this case, they file separate tax returns. because one owns a business, I think. So whatever the reason, they happen to be married, but we are doing individual tax return. So you want to come down, you'll see the 10% penalty, but there's actually not going to be one from the TSP as long as you were 55 years old when you retired, or if you're special provisions and you retire at age 50 or over. And I believe they've even fixed that loophole. So if you're special provisions, I think you can retire below age 50, you should be fine. Then you have to choose the specific amount. So this is where you type in the $25,200 in the specific amount. You'll hit continue. And then this shows you here, it looks like you're taking a $25,000 withdrawal, and they're going to withhold $5,000 because they automatically do a 20% withholding. But you can come over here and click on federal income tax, and it takes you over where it shows you the 20% withholding, and you would go and change the 20% to 100%. You do have to save and return, and then it brings you back to show you that you're making a $25,200 gross cash payment, but federal withholding is also $25,200. So the net cash payment to you is zero. So this will be a $25,200 taxable event. You'll get a 1099 that shows up as a taxable distribution along with the Roth conversion amount. That's also taxable. So the TSP money will go to the IRS. So you'll want to click acknowledge here, and you got to acknowledge these things. You may want to read over it if you haven't done this before, and then click continue. So what this doesn't do is it doesn't pay your state taxes. TSP does not withhold for state. So you can see here, you get to choose mail a check to you at home address or direct draft. In this case, it doesn't matter because there's no money actually coming to you. It's all going to the tax people. So we selected direct deposit and hit continue. Back to our state tax. You're going to need another way to pay it. So next April, when you do your taxes, you'll need to be prepared that you're going to owe some money. In this case, it's going to be $5,250 owed to state. And so depending on your state, you can check with them about paying early or doing a quarterly payment, something like that. Maybe you're in a state where there is no state income tax and you don't have to worry about it. But just know that with this loophole, the way the TSP works, that there's a way to pay the federal tax, but there's not a way to pay the state tax. Come up to the screen here where it shows the details, and then you'll hit submit. It will ask you to verify where they've texted a code. So you'll type that in, and then you get you submitted successfully, showing you $25,200 is a gross payment. You'll get a 1099 for that, but all $25,200 will go to the IRS and be there when you file your taxes. You'll have already paid the IRS ahead of time, so that you should not be penalized or get in trouble or have any kind of problem for not withholding enough. So you saw the mechanics of how to come up with the amount to Roth convert and how to work the TSP website to get your taxes paid. If you need help with tax planning, we help people that are 59 and a half and over because we can move their TSP to an IRA, and we can also do this type of planning for you. If you're not 59 and a half yet, but you've retired, like in this example, we can help move most of your TSP out, but not all of it, because you need to leave some there in case you need to take a distribution, or in a case like this, you may want to pay taxes on a conversion like we did here. You don't want to move it all out if you're under 59 and a half. Now, once you reach the age of 59 and a half, you can then do Roth conversions from an IRA and have the withholdings done in an IRA where you can withhold state taxes too. So that would be beneficial. So if you have questions, or if you need help, or if this sounds like a good idea, but you don't really know the mechanics, we would love to help. Go to ChristyCapital.com and click Talk to an Advisor. Roth conversions help to lower RMDs. Check out this video, how to lower RMDs in your TSP. My name is Mel Stubbs. Sure would be great to hear from you.